adoption of digital assets has been a little slower, or, I mean, you could see it as being incredibly quick or incredibly slow, depending on what time frame you think is reasonable. I would say revolutionizing international finance is not something that you would expect to happen overnight. But it is a multi-step process, and I think the first problem that we encountered, I mean, we kind of thought that we could take a direct line to settling with a digital asset, and I think a lot of people thought that, well, now we have digital assets, let's just use them for payments, and that'll be that. Part of the problem is that the payment systems are just not capable of supporting instantaneous settlement. So if you think about a payment system like SWIFT, where you just kind of push a payment message out, and you don't necessarily know the entire path, and you don't know the fees until later, you don't even know if the destination account even exists until sometime later when the payment is actually processed by the destination institution. There's no way that you could build instantaneous settlement into a system like that. So we kind of found ourselves in this situation where if we wanted institutions to settle their international payments with a digital asset, we first had to rebuild the payment messaging, sort of the plumbing.
I'd like to welcome everybody to Crypto Nation News. I'm James Malpass, and today, I really want that to sink in. Before we could use the digital asset, we had to rebuild the plumbing. A lot of people are getting impatient. A lot of people are saying this about Ripple, that about Ripple, but Digital Asset Daily put out a reminder for everyone. If you're not following Digital Asset Daily, I really recommend you do it. It's at Asset Daily on Twitter. XRP Investor, please take a moment to watch again. This video is a reminder, be patient. All good things come to those who wait. An entirely new financial highway is being built. We know it begins 2020. Guys, I can't stress it enough. The importance is going to be to really and truly see this thing out. It's not going to happen overnight. I've said it a million times. I've heard it said a million times, but people seem to forget it daily. What you need to understand is what they're actually building and the fact that it takes regulation time to come in. But we have this huge article coming in today from the Tokenist that is talking about the Cryptocurrency Act of 2020, congressional prep for Libra or more. Members of the United States Congress are recently drafting a new bill clarifying digital asset regulation. The Cryptocurrency Act of 2020, if approved, will identify 3 types of digital assets along with the corresponding agencies responsible for regulation. And is Congress preparing to regulate Libra or something more? I think that we all know that it's not just about Libra. We all know that it's going to be a wide variety of digital assets that are going to step up that have true utility and which need to be clarified on exactly what it is. I think that we're going to find that a lot of digital assets that you hold might not be the best thing for you to hold. I think we're going to find that some of them are going to be securities. I think we're going to find that some of them just lack utility, and we're going to see a washout of the ones that really and truly do not serve a purpose, do not solve a real problem. We're going to see that washout. But let's get back into this article. U.S. Congress and digital asset regulation in 2019. 2019 has been a busy year for U.S. government in terms of digital asset regulation. At the beginning of the year, Congressman Warren Davidson introduced the Token Taxonomy Act of 2019. In the summer, Facebook revealed plans for its controversial digital asset Libra. Since its initial unveiling, Libra has been met with skepticism from regulators across the globe and even initial backers such as MasterCard and Visa. Now, as the year comes to a close, a discussion draft has surfaced from U.S. lawmakers. The bill, referred to as the Cryptocurrency Act of 2020, was introduced by U.S. Representative Paul Gosar. According to the draft, the bill's purpose aims to attribute regulatory clarity regarding which federal agencies are responsible for the different types of digital assets. The corresponding agencies are then responsible for informing the public on the appropriate licensing, certifications, or registrations needed to issue or trade digital assets. I have a feeling that there's going to be some people that are involved in digital assets that are not going to like the outcome of the Cryptocurrency Act of 2020. I have a feeling that some are going to be disappointed that stuff that they thought was a security and ragged on for years and years and years are going to find out that it may not be a security. I think that this Currency Act of 2020 is going to be a great deal of legislation that is coming through. And like I say, some will be heartbroken, some will be welcoming it, but nonetheless, it's going to be a change to the landscape all the way across the board once we actually start getting some regulatory clarity. So the bill identifies 3 different types of digital assets. Each type has a corresponding federal agency required to provide regulation. These 3 different asset types include cryptocurrencies, crypto commodities, and crypto securities. The bill went on to identify 3 agencies as federal digital asset regulators. These include the Commodity Futures Trading Commission, that's the CFTC, the Securities and Exchange Commission, the SEC, and the Financial Crimes Enforcement Network, that's FinCEN. Each agency will work as a sole authoritative government agency for one digital asset type. FinCEN will be responsible for cryptocurrencies, the SEC will be over crypto securities, the CFTC will be over crypto commodities. Though still a draft, the bill went on to identify basic responsibilities as well. I think that as we get further and further into regulatory clarity coming into the landscape, I think that we're going to see, not only are we going to see digital assets that start to fade into the background, I think we're going to start seeing some of these actual startups that are going to actually start fading with them also, whether it be payments providers that were built upon digital assets, whatever it is, people that do not want to meet certain criteria and actually approve upon what the regulatory clarity states as far as offering KYC, AML, which is know your customer, anti-money laundering. I think we're going to see some of those guys that don't want to participate in that sort of scheme actually start to fade into the background. Regulatory clarity is on its way. I'm excited for it. I really and truly want to see how things are classified. I want to see how the landscape is laid out after the fact. And I think that it's really the piece of the puzzle that we've been waiting for a long time. All right, in other news, people are saying that Bitcoin may not go up after the halving. CoinShares CSO, she explains why. So let's get right into this here. She says there is a very real possibility the price of Bitcoin does not go up after halving. For the first time, there is a robust derivatives futures options market for Bitcoin. Most firms look to speculate on Bitcoin will trade a derivative, not the underlying. So, if you don't understand what that means, I really need you to understand that Bitcoin futures trading, in my opinion, this is just my opinion, but here's an article to back it up as well. My opinion is the futures trading is really and truly who we're going to find behind the manipulation of digital asset markets. Everybody knows that the market is tied to Bitcoin. Some people want to argue, no, it's Ripple that controls XRP and they're dumping it and you're stupid and all of this. But at the end of the day, all charts show Bitcoin shows the direction in which all altcoins are going to play. You have your variety of pump and dumps that happen here and there. That is no joke. You have your variety of speculation that comes out with a piece of news article and things pump up, but it's only a matter of time before they actually fall back to reality right where they were before the pump. So futures trading has really and truly been a headache for crypto investors like you and I, your daily retail investors like you and I. The futures contracts have been a thorn in our side, and it shows in this article. I'm not going to go in reading the article too much, but it will actually show you where Bitcoin pulled right back into the gap. Here it is. This is where futures contracts were trading. This is where Bitcoin was. Futures contracts start to come to an end. They pull it back down into the gap. It's plain to see. All you got to do is just open it up and look at it and actually see the fact that futures contracts are the manipulation behind this market. It's exactly who is making the money. It's exactly who is trying to shake you and I out by seeing how long they can keep this thing down. But I'm here to tell you, it's only a matter of time. I'm not going to say days. I'm not going to say months. It might take a good while, but there is going to become a time when utility, real utility, will separate certain coins, certain digital assets away from Bitcoin and the manipulated futures contracts. That day is coming. There's going to become a time when Bitcoin is really and truly the altcoin because it does not have the utility to stay King Kong forever. I'm excited to see that day. Are you excited to see that day? Let me know how you feel about Bitcoin futures contracts in the comments below. And guys, it's a short video. I want to wish everybody a Merry Christmas. Today is Christmas Eve. I hope that everybody has a blessed holiday. I hope your families do as well. If you like the content that I'm providing, hit the like, hit the subscribe, turn the bell on so that you know when we got more videos coming out. And as always, guys, we may not have it all together, but together we can have it all. And I will see you in the next one.